intraday from Quantum Flow. Today is Wednesday, March 27th, 2024. Please be sure to like and subscribe to our YouTube channel at QuantumFlobyJTNC to receive daily market recaps. Today's SPY opened up just shy of $3, rallying off a 518 support level we had identified as major support, a level just below the lower trend channel, which has been in place for several months. The market sold off a bit in the morning session, falling to as low as 519.49 before chopping around in a fairly tight range until the last hour of trading, where the market decided to rally. As we have stated for a few days, the market was looking for a catalyst to break out of its narrow range and the low volumes we have seen for the last 3 days. And today we saw the market move up $4.36 to close at 523.11. Today's move up was due to a drop in the 10-year bonds and a speech by the Fed governor. We anticipated yesterday that the market would look for an excuse to break out of the range, and it found it in the Federal Reserve Governor Waller's speech today. In our view, today's move was more technical than fundamental. Even after 3 days of consolidation, the market found support at the all-important levels of the lower trend channel and 518, which again is a level we've talked about for several days. The market had enough energy from 3 days of consolidation to move back into the trend channel and close within a whisper or so of the all-time high. Volume was reasonable at 82 million shares, which reinforces our view that higher prices will follow. As we stated in yesterday's video recap, we felt the market was looking to break out from its narrow range after first experiencing some early price pressure. We also felt the market would close back in the trend channel and resume the bull trend, which is precisely what the market delivered today. And while dealers were positioned for the market to rally, they felt it would stall in the 521.50 range. But with bond yields falling and the Federal Reserve's dovish comments, the market rallied all the way to 523.17, closing at its high on the day. Tim posted in the pre-market at 8:32 a.m. that he felt if the market did not hold the 521 level early in the session, the market would move towards his lower target of 519.10. He also stated if 521 were breached to the upside, the market would likely reach his upper target of 523. The market did initially fall, moving toward Tim's and Quantum Flow's lower targets before breaking 521 later in the day, rallying again to Tim's 523 price target. Day after day, the information our Quantum Flow models provide, updated with Tim's pre-market information, is actual intelligence you should learn to incorporate into your day's trading. And once again, as we have stated for some time, we remain bullish and expect to see higher prices, including new all-time highs. Our Quantum Flow models continue to believe the market will trade between and above the current all-time high and a low of 518. The market tested 518 yesterday, with price respecting this level and failing to fall any further. The market remains strong, even if it's showing some initial signs of weakness, so we continue to buy all dips. For Thursday and the last trading day of this week due to the Friday holiday, we expect some early price pressure, perhaps falling to as low as 521 before the market attempts to make a new all-time high. There certainly is room higher in the current trend channel all the way up to 529. So breaking the prior high of 524.11 should not be difficult. While this may not happen Thursday, there is a high probability we will see a new high before the end of next week. The Quantum Flow model projects SPY's range for Thursday to be 519 to 524, with the upper target just below the all-time high. It would not surprise us to see a new high Thursday, heading into the holiday weekend. But again, certainly by the end of next week, we expect new highs. Quantum flow was flat going into today and will not take any overnight trades on Thursday, given the macro risks of a long weekend. Dealer positioning for Thursday into the upside has dealers selling 524 and 525 calls, implying any break of the market high will be limited to 525. To the downside, dealers are buying 521 to 515 puts in relatively large size, implying a concern about a sudden correction, which could come at any time. Insurance is relatively inexpensive, so dealers are selling calls to finance the purchase of puts to protect their portfolios. We continue to reiterate that at the current market levels, money well spent. Let's see, for next week. Looking out to next Friday, we see dealers buying 524 and 525 calls, implying a new all-time high next week. At the same time, they are selling in very large size, 527 and higher calls, using the funds from the sale to load up on protective puts. They are buying 520 and lower strikes in major size. Again, this implies a new all-time high likely next week, limited to 527, still within the trend channel, but with the potential to fail once it reaches that 527 level, pulling back to 20. Dealers remain positioned for higher prices, but are also safeguarding against any downside risks. As we state often, the market dynamic will not change until we see several days of price closing below the trend channel that has been in place since the end of October 2023. Again, dealer positioning changes every day, so be sure to check in with Quantum Flow's pre- and post-market recaps to understand how dealer positioning will affect the day's price action. Tim posts his pre-market updates by 9 a.m. every day on our Discord channel, and you can use this information to make your decisions for the day. And be sure to watch these post-market video recaps for actionable intelligence, which will set you up to trade successfully the following day. Good luck and good day.